Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon and numbers that honestly can put you to sleep. But today we're diving into Marblegate Capital Corporation's latest quarterly report, and let me tell you there are some major financial gymnastics happening here. Think of it like a high wire act but with spreadsheets. So what is Marblegate Capital Corporation all about? Well, they are a big player in the New York City taxi medallion market, which is already fascinating enough, but they also do specialty finance lending and taxi fleet operations. Basically, they are in the business of medallions and the loans tied to them. And for a while now, they've been trying to fix the messy history of how these medallions were financed and sold. Let's jump right into the numbers because that is where the real story unfolds looking at their balance sheet for the 30th of September 2025. Their total assets were around $663 million. That is down a bit from the 31st of December 2024 when it was just over $673 million. One of the first things you notice is their cash position. It was about $10.6 million on the 30th of September, down from over $35 million at the end of last year. That is a pretty significant drop in their readily available cash. Now, their biggest asset by far is their loans held for investment, which they value at fair value. That number is about $258 million on the 30th of September, down from nearly $281 million at the end of last year. This is their core business, the medallions and the loans tied to them. And then there are the intangible assets, mainly their taxi medallions themselves. This number is over $356 million for the 30th of September, which is up slightly from $345 million at the end of last year. This shows they've been acquiring more medallions. On the other side of the balance sheet, total liabilities jumped quite a bit, reaching about $72 million by the 30th of September, compared to just over $14 million at the end of last year. A big chunk of this increase likely comes from the business combination that happened in April. When we look at their income statement for the 3 months ending the 30th of September 2025, total revenue was about $12 million. That is a huge jump from just over $5.4 million in the same period last year. For the 9-month period ending the 30th of September 2025, their total revenue was around $34.3 million, nearly doubling from about $16 million in the prior year. A massive part of this revenue surge comes from lease revenue, which was $6.9 million in the last quarter, and over $12 million for the 9 months. This is new revenue stream for them related to their fleet operations. And then there is lease revenue from deposit liability, which is quite substantial at over $8 million for the 9 months. This seems to be a one-time recognition tied to a previous acquisition, likely the Septuagint one we'll talk about later. Now, for the headline number net income or loss for the 3 months, ending the 30th of September 2025 was a loss of about $1.3 million. That is a flip from the same period last year when they had a profit of $9 million for the 9-month period. They reported a loss of over $52 million, a stark contrast to a profit of $13.5 million in the prior year. This huge shift in profitability is heavily influenced by their provision for income taxes for the 9 months ending the 30th of September 2025. It was a massive negative $50.9 million that is not a tax refund. It is an accounting entry related to taxes that significantly impacted their reported net loss. Condensed consolidated statements, this large tax expense seems to be a direct result of the business combination they completed in April 2025 as they transitioned from a partnership structure to a corporation for tax purposes. Operating expenses also saw a big jump. General and administrative costs went from a mere $142,000 in the 3 months ending the 30th of September 2024 to over $5.6 million in the same period this year. That is a more than 3,800% increase. The 9-month figures show a similar explosion from $349,000 to over $11.4 million. This is largely due to becoming a public company and integrating Septuagint. Fleet servicing fees are also a new expense line item, showing up as over $1.8 million for the last quarter and over $4.1 million for the 9 months. This relates to their consulting agreement for fleet operations. And then there are management fees to related parties, which are significant at over $2 million for the quarter and $3.7 million for the 9-month period. This is for the management services agreement with Marblegate Asset Management LLC. Looking at other income or expense gains on loans held for investment swung from a gain of over $7.1 million in the 3 months, ending the 30th of September 2024 to a gain of just $1.3 million in the same period this year. For the 9-month period, it went from a gain of $8.4 million to a loss of $3.3 million. This indicates their low and portfolio performance has taken a hit. This ties into their intangible assets, which are their taxi medallions. They own over 2,100 medallions in New York City, alone valued at over $355 million. This is a significant asset base, but its value is tied directly to the volatile taxi industry. The valuation of these loans is tricky. They are valued at level 3 in the fair value hierarchy, which means their valuation relies heavily on unobservable inputs, like estimated medallion prices and discount rates for future cash flows. The report shows a significant adjustment to reduce these loans to fair value totaling over $612 million. Within their loans, about $187 million worth are MRPCA loans, which are part of a relief program for struggling taxi owners. And about $70 million worth are non-MSRPA loans in New York City, which are performing more poorly with a larger portion in non-accrual status. Roughly 17% of these were in default by the 30th of September. The company has been actively foreclosing on medallions when loans go bad, but this has led to significant valuation markdowns, especially for loans tied to Chicago medallions. The report shows substantial losses here. A big event this year was the Septuagint acquisition in April, where they bought out the remaining interests, making it a wholly owned subsidiary. This acquisition brought in new assets like WAV grant receivables and property and equipment, but also new liabilities. They break their business down into two main segments, specialty finance and fleet operations specialty finance, which is their loan business, saw its revenue drop by 5% for the quarter and 9% for the 9 months. This is mainly due to lower interest income from MRTI loans. Fleet operations, which is newer revenue streams, saw a massive jump in revenue due to the Septuagint acquisition and new lease revenues. This segment is now a significant contributor to their top line. Looking at the segment results, the specialty finance segment's net income dropped significantly, while fleet operations, while still showing a loss for the quarter, is growing rapidly. And showing signs of life, the biggest story, however, is the overall net loss of $52.3 million for the 9 months, primarily driven by that enormous income tax provision. Cash flow from operations was negative for the 9 months ending the 30th of September 2025 at a little over $1.1 million used in operations versus provided over $9.8 million last year. This is largely due to the Septuagint acquisition and other costs. Investing activities show a significant use of cash, over $11.7 million for the 9 months this year compared to over $8.4 million. Last year, a big part of this was buying new taxi vehicles. Financing activities also show a substantial outflow of over $11.6 million this year compared to $15 million last year. This reflects payments related to the business combination and capital distributions. So what is the big picture here? Marblegate Capital Corporation has undergone a massive transformation with the business combination and the acquisition of Septuagint. Revenue has exploded thanks to new leasing activities, but their profitability has taken a massive hit primarily due to one-time accounting adjustments related to taxes and the sheer cost of becoming a public company and integrating new businesses. The loan portfolio still shows signs of stress, with significant losses on some of their assets and the general economic sensitivity. Of the taxi industry remains a huge risk. Their strategy seems to be navigating a tough market by restructuring loans and acquiring medallions, but the path to consistent profitability looks challenging, especially with the enormous tax-related adjustments and the ongoing operational costs of being a public company. They are definitely managing a complex and volatile business. Alright, that is our breakdown of Marblegate Capital Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.